Thank you very much for being part of this event. It's basically a Global Money Week event that we've put together as piggybankadvisor.com in collaboration, of course, with Morgan & Co. and also the Securities and Exchange Commission of Zimbabwe in collaboration with the Investor Protection Fund. So thank you for being part of this Global Money Week event. I'll just give you a background of piggybankadvisor.com. We are basically one of the fastest growing community of trading and investing enthusiasts. We make use of digital platforms to increase the participation of individuals, households on global and local investment markets. We also an educational platform where we create content on different topics like economics, stock market tips, investing, budgeting, and the like. So our webinar for today is themed Lessons from a Seasoned Investor. As you know, of course, on the Zimbabwe capital markets, we do have the ZSE, but we thought that it would then make sense to bring in someone who has been investing on our market so that they can also share their experience and also inspire young people out there to start their investing journey. So today we have Dr. Solomon Guramatunhu. Of course, he's not new. He's a well-known specialist, eye specialist with very profound credentials around his work in health and things like that. But of course, a lot of people might not be aware that he's actually an active investor on our local markets. So Dr. Guramatunhu, thank you very much for being part of this call and for sharing insights and just imparting one or two things to young people out there. Thank you for coming through, Doc.
A real pleasure, Batana, and thank you so much for inviting me. And it always gives me so much pleasure to interact with young people and hopefully share some ideas.
Thank you, Doc. So our event is also sponsored by Morgan & Co. I think it's also worth highlighting that Morgan is a local stockbroking firm in Zimbabwe, and as a sponsor, what they're offering today is that for any student that would ask questions after the first segment, they would actually get a prize. So I'll just ask Precious from Morgan, one of my colleagues, to just highlight on how she's going to be distributing prizes today. Precious.
Hello, everyone. So today we've got T-shirts for people who will be asking, who will be asking any question after the first segment. So we will look at the question that was asked, if someone was really listening, and if someone asked a relevant question which shows that they were engaged, then they're going to get T-shirts. So the T-shirt is like this T-shirt that I'm wearing, which has got the Morgan & Co logo and Piggy Bank Advisor. So to all our students who are listening, remember that our theme for Global Money Week 2021 is take care of yourself, your money, learn, save, and earn.
So thank you for that, Precious. So definitely we'll be encouraging you to participate in the discussions, ask questions, and you walk away with a prize. At this point in time, I'll just ask a representative from Sengoda College to just give us a remark before we kickstart. Over to you. Clarissa, are you there?
Essentially saying that I'm an eye specialist with interests in health, in education, and the arts. So I worked for the government and also for the university, established the training of ophthalmologists at the university, and also established a school for optometry at Bindura University, and we have a Guramatunhu Family Trust, which is active on the stock market, but also have a scholarship fund. And then we also sponsor the arts. So in short, those are my interests. And also I love dancing and scuba diving and other things.
Interesting. So, okay, tell us more about, of course, this is a global money event, so tell us more about your investment journey. I mean, at what age did you start, investing or buying into shares? When exactly did you start, investing?
I think I started late. I started in the 90s. And my greatest regret is that I didn't start earlier. So for the students, I think the theme is please start investing early. So I started in the 90s. I didn't really understand what I was doing. Then the more I understood about the stock market, then I became more involved in the 2000s. And then, of course, lately, I'm very keen on the stock market.
Okay. So a lot of people, I mean, we engage a lot of young people out there, about stock market. Some usually say that they do not have enough money, to invest on the market. So the usual question is, how much is enough money to invest, and how much can you get started with at the end of the day? Because one person can say, I don't have a job. How can I then get into this game? So, I mean, what do you think about that, Doc?
I think everyone must know you never have too little money to invest in the stock market. You could start off even with $100 or $200 or $500 or $1,000, because you're always going to make more money if you whatever you invest in, especially if you do it correctly. So there's never too little money to invest. So I would encourage everyone to get started with whatever you have. As I say, even $200 or $500, just get started.
Okay, so the trick is just getting started. I think that's a clear message to say that even if you don't have much, just join in and start buying 1 or 2 shares. How about the issue of inflation? I think being in Zimbabwe, there's always that question to say that, if I put money in shares, there's inflation, devaluations and things like that. Now, how does that impact you as an investor, and how can you hedge really against inflation? How do you go about that?
I think once you get into this game of investing, yes, you then understand about, as you mentioned, the inflation and devaluation. First, especially for the young ones, you cannot keep your money in the bank because it just loses value. So one way is to buy the shares, and there are a number of shares on the stock market. There are those who export, there are those who give dividends, and there are also those who appreciate quite rapidly. So you need to do a bit of homework. And I would also suggest to the young ones that it's nice to diversify. So you can have some of your money in the stock market where you can get rapid gains. You can put some in the real estate. And now there are other things that you can invest in as well. So I think the entry point must be the stock market because your gains are very quick. And I would also advise people to do dollar averaging so that don't just put the money and stop, but maybe every month you put a little, next month you put a little, and keep on doing that. In no time, you'll find that you're building quite a small fortune.
Thank you for that, Doctor. But of course, I think as an investor, there are certain habits that you develop or that you pick up, sort of that make you a successful investor. I think it's a fact that not everyone is a successful investor or trader on the market. what is sort of separated you from the average man in terms of managing your finances as Dr. Guramatunhu?
I think first and foremost, you must do your homework. You need to understand about the companies that you invest in, what they do, learn something about the management, their track record. And sometimes you may be just interested in companies that give good dividends. So you must know about that too. And you must know the product produced by those companies. So that when you invest, because remember, we are becoming part of a shareholder of that company. So you really must know exactly what you're doing. And I think you read and also listen. Talk to people, talk to stockbrokers. You don't have to follow everything they say, but you can talk to a variety of stockbrokers. In the end, you'll have a good idea, and you might end up with one or two that you become very close to because they always give you good advice. So I think you should shop around, and then make notes of the investments that you make and how they perform. And sooner or later, it becomes part of you. It gets into your bloodstream, and you know exactly what you're doing. And I've come to a point where I normally take my tell my stockbrokers what I would like to buy, when to get in, when to get out. I've also found that in some instances, the longer you stay with an investment, especially the good companies, the more you actually achieve.
No, that's quite interesting, because just looking at your background, you are a medical doctor, and you highlighted the need to understand things such as financial statements and things like that. So what can you say for someone who's coming from a medical background, probably they are a lawyer, and then they want to move into stock market investing? Because a lot of people say, no, we don't have a finance background, we are not economists and things like that. What can you say about that in terms of just appreciating how the capital markets work?
Well, Bachana, knowledge is knowledge. One has to make an effort to acquire the knowledge, and it's not very difficult. And there are also some courses, on reading, the balance sheet, profit and loss, and basic stuff like that. I think one can make an effort to learn, and there are a lot of people who can also guide you and advise you. So I think if you're going to be a serious investor, you have to acquire that knowledge. But also, of course, if you don't have time, then you can rely on people who have the knowledge, like, as I said, the stockbrokers and other investors who can advise you to say, well, go for this company, or you can sometimes go for the blue chips if you are lazy, don't want to get too much involved, and just put your money and you follow it. So there are different ways, but I think any professional, whether you're a lawyer, engineer, or doctor, you can acquire the basic knowledge surely.
Interesting. I think you come up with a very interesting point to say that you need to invest in knowledge by the end of the day. Just talking about that, I think a lot of you out there would know that the Securities and Exchange Commission of Zimbabwe, in partnership with the Investor Protection Fund, they've come up with a book. It's actually quite useful in terms of you understanding the basics of capital markets. It's called the Investment 101 Handbook. So it's also available on our site, piggybankadvisor.com. It's available on the SECZIM site. It's a starting point for anyone out there to just learn about the capital markets. So I think it's a good investment. Later on, of course, we have the head of investor education from SECZIM to just share one or two things about that. But moving on to the next question, Doc. What are some of the mistakes you have made and the lessons you learned since the time you started investing?
Yeah, good question, but I've had my fair share of mistakes. For instance, some of them not because of myself, but also maybe I didn't know enough. For instance, I was one of the top 10 shareholders of Wange Colliery, which was a solid company when I went in because it was listed in Johannesburg and in London. And they had lots of coal, and I did my homework and I thought it was a good investment. But the history, management, suppose corruption, and now it's suspended from the stock exchange. Then I also invested in banks. I remember, the ones which disappeared now, like ZABG, like Trust. So I lost money that way. So again, maybe I didn't do enough homework to look at the management, their track record. I think it's a pity because most of the indigenous banks that we wanted to support didn't do well. I mean, if you look around now, I think NMB is still around, but Time Bank, ZABG, Trust, they all disappeared. So the lesson would be to be very, very careful in some of these institutions before you invest your money. As I said, look at the track record of the characters. And I might say as an aside, Batanai, that I was founding chairman of Interfin Merchant Bank. And I remember once the bank started, I saw the young guys got into their heads that they're making money and they wanted a big house like yesterday, a big car like yesterday. And I warned them at that time, said, gentlemen, these monies belong to the depositors. And of course, they wouldn't listen. So I resigned forthwith. And I knew deep down that things wouldn't be too good in the future. And of course, it collapsed. So I've never advised anybody to put money in investments that you're not so sure of, and especially if you're not so sure of the management.
Yeah, that's quite interesting because it's sort of a qualitative means of analyzing companies. Because when you look at things such as corporate governance, there are no numbers there. So you really have to understand, the backbone of the company, the shareholder structure and things like that to sort of have an appreciation of who's managing things there. Quite interesting though. So my next question will be, as an investor or just as a professional doctor, what keeps you motivated and what drives you to always want to be successful? I think it's worth noting that you're involved in a lot of things, the medical fraternity, even in education, investing, and things like that. What keeps you motivated? What drives you to achieve?
But to the young people listening to this, I think it's very important, first and foremost, to be focused, to know exactly what you want. So I think it's important to set goals, whether it's investment or your lifestyle, and to be very curious. Now, again, for the benefit of young people, I started off as a doctor, but I was always keen to learn. That's why I ended up now learning about scuba diving and learning about dancing. And these are things that I still to do today. Now that keeps me going. And then I had an idea of the lifestyle that I wanted. And one of the things about investing is when it's not just about making money, but it's what you use the money for. Now, my background is that I looked after my young sisters. So I had to have money to look after my sisters. I had to buy a house to make sure my sisters had a home. Because of that, I knew whatever money I made, I had to put it to useful purposes. And I always wanted to make a change in other people's lives. And that is why I set up the Guramatunhu Family Trust Scholarship Fund. Mm-hmm. So we had students coming to my party and say, "Well, doctor, I've got 3 A's, but I'm an orphan. and I've got a place that use that, to study medicine. And I wanted the ability to be able to help these youngsters. That's how it all started. So right now, when I invest, most of my income should go to the things that I believe in. So giving scholarships. Going back to my primary schools, we built a computer center in the library. Also now we back to a village where I grew up, and we're going to change the whole village. Those are the things that really motivate me, was I'd like to make a difference and a substantial difference to other people's lives. So that keeps me going, but I enjoy my life at the same time. So I still do the things that I really love, my hobbies, and also, keeping fit. So I think it has to be a lifestyle. So you need to know the lifestyle that you want to have, to achieve, the things that are important to you, the changes that you want to bring to the world, and that keeps you going.
Interesting. So it's really about setting your goals and pursuing them. Quite insightful there. So coming back to the stock market, or to the investing game, probably can you share with us what is your strategy, and how exactly do you pick stocks? What do you look out for? A lot of successful investors, people like Warren Buffett, they have their own system, they have their strategies. Can you just give us a glimpse into how you do things?
Yeah, I must tell you about tonight. You remember Roy, the white guy who was on the stock market.
Roy Turner, yes, I remember.
I must tell you that he inspired me. Because I thought to myself, look at this guy. He was a civil servant, and he was worth so much on the stock market. And I said, well, what would stop us? Us Black people, to also accumulate wealth on the stock market. And therefore, I looked at his pattern. He was in almost every counter, and he had lots of shares in every counter. So I started buying, and I was looking for, of course, good companies, which I thought would not disappear tomorrow. As I told you already, I made some mistakes here and there. But overall, I was very happy with the investments I made. So I think you must keep going. Don't just invest and stop. If you really believe in a company, keep on accumulating those shares, because the returns at the end of the day are huge. So that's been my strategy, to look for companies that I like, and I keep buying the shares. And when I have, say, a pot of money coming in, I just pick on a company and I put in. And I remember there are companies which are not doing well at some point, like Chernel, for instance. And I thought, yeah, it's very quiet, but look, what they make, eventually they'll get involved in construction and so on. So I remember buying those shares when they were very, very low. So if you have an idea, even if the company is not doing well at present, but you think that eventually when the economy turns around, this company could do well, and the shares are really so low, I'll put in lots of money there, and then you wait. But when you invest, please, you must be prepared to lose. Don't commit suicide. You must know that you're an investor, you take a risk all the time you invest. So I've always said, whatever I do, if I lose, I just take it on the chin like a man, So I think we need to have that attitude. But I think our stock market, it's a pity, of course, the economy before was very turbulent. So, but now I think once it stabilizes and you really go in the stock market, I think the returns are phenomenal.
Yeah, I think that's a very important point. You talk about the issue of being patient, right? So we've got very young people, they really want to make it quick, right? They want to be traders, and things like that. But what can you say about the approach? Should we have a long-term approach, or should we be sort of traders where we just look for short-term gains? How do you balance being a trader and being a long-term investor? How do you balance those?
Well, I think for young people who have time, and they should also have the knowledge, they can trade. But for professional people, maybe they are engineers, lawyers, they might not have time to sit on the computer and trade in and out. Then you need to be medium to long term. I know long term can be very profitable. I remember he used to be CEO of BAT, and he was telling me that when he joined BAT, the share was like 70 cents, 70 cents. I don't know how much it is now, but you can calculate if you bought 1 million shares at that time. I said, how much? It would be huge, almost unbelievable. So I tend to be on the long term personally.
Okay. So if you have the time and resources, you can go ahead with the trading, but it pays to be long term.
Yes.
Thank you for that. I believe most successful people out there, they are widely read. Which books can you, or do you draw up inspiration from in terms of just money management or stock market investing? Which book do you recommend, Doc?
Well, my Bible for some time was The Intelligent Investor, by Benjamin. I read that a bit. But also for young people, I suggest they also read Richard, the Rich Dad Poor Dad. I think they should read that just to have an idea that they should buy assets, not liabilities, and to know what assets are. And so they can be getting the stock market, take some money from the stock market, going to real estate, but not waste their money buying frivolous things, or to know that you can have a fancy car, but that's not an investment. They need to understand those basics, I would say. That would be my advice to the young ones.
Yeah, I think that's quite brilliant because some things that actually referred to as assets are actually liabilities. They actually drain on your cash flows. So that's a very important book, Rich Dad, Poor Dad. So if you could probably wind back time, what would you do differently now in terms of your investments or in terms of how you manage your money?
But first, if I knew what I know now, I'd start investing very early, in my teens if I could, and keep investing every month. Because I think if you start investing young, I'm pretty sure by the time you're in your late 20s or 30s, you're a millionaire, if not a multi-millionaire. And I'm talking about in US dollars. So that's what I would definitely do. And maybe I would have been more careful about some of the investments I made. I've already told you when I lost money, but I think it's part and parcel of investing. You lose from time to time. That happens. But now I think I'm a bit wiser than before. So the message is youngsters must start investing in the stock market early, and they must keep investing.
Very, very good lessons there to start as soon as possible. Yeah. So any tips that you can share just in terms of managing money? Because a lot of people would say, I've got a small paycheck or small income, and I can't set aside anything for investing. What can you say in terms of budgeting? Because I think that is where we have a problem in terms of personal finance.
I think that most of the things that we do are not investing. You know, you can spend so much money and you look around and say, what have I done with my money? And you find you haven't done anything useful. I think we should stick to basics. And I have to say, but from my travels, my interactions with other people, some very rich, some not so rich, I think as Black people, we need to have a mindset, to change our mindset, to go for things that are important in our lives and cut out what is not important, to invest in real assets. As I say, youngsters should not get carried away by buying fancy cars. That's not necessary. That's not an investment. And even accommodation, you just need, when you start, basic accommodation. But invest that money, because what you want to do is take the money, the spare money that you have, and invest it so that it breeds more money. We need to get that understanding. Your money should breed more money. It should work for you. And that should start much earlier on. And I know, I'm sure you've heard that I talk a lot about women having natural hair, natural skin and stuff like that. The reason is it's again mindset, because you buy that stuff, you're enriching other races who probably look down on Black people, and you got the most beautiful hair, the most beautiful skin. So I combine this as part of the mindset. And I dare say, but you know, for young people in this country, we have, in my mind, one of the richest countries in the world, because we have everything, you know, from the minerals, you know, the diamonds, the gold, the lithium, the chrome, the platinum. We have 60 different minerals, and we can grow anything in this country. For young people, you need not to be creative and not think of just getting a job, but in fact, starting your own company, do your own thing, create the jobs yourself. Because if we wait for government, we'll be waiting forever. If we're looking for a job, we'll be looking for a job forever. So it's a change of mindset. That's what I say to the youngsters. The future is theirs, and the things that you can do in Zimbabwe, the wealth that you can accumulate in this country is very difficult to do it elsewhere. That's been my experience when I travel, and I go to the States, I go to Europe, I go to other places. The things that you can do here, or you can't do it, it's very difficult to do elsewhere. And it might appear things are very difficult here. Yes, they are. But we now need to be very creative, very resourceful, and you can make your fortune in Zimbabwe. Tough as things are, there is a way, I believe.
Yes, just on that note, I managed to convince my brother who lives in Namibia, so he invests on the JSE. So I managed to convince him to buy a stock just a month ago on the ZSE, and today he's sitting on 50% gains in real terms. So it shows you that, of course, there are really opportunities on the market. But talking about the shift in the mindset, I mean, we've got a school here, we've got Sengoda College, there are a lot of schools out there. What can you say regarding the curriculum? I mean, you know, when you go to school, secondary, even advanced level, no, there's no talk about stock market investing. Even at university, you then find yourself, you know, getting a job, and then you start learning about the stock market. What can you say about the curriculum currently?
But you know, that's most unfortunate. We need our youngsters to know how to make money, how to create wealth. That's very, very important. And I think our stock exchange, our Securities Exchange Commission must go to the Ministry of Education and persuade them to make sure that we incorporate wealth creation or financial literacy almost from grade 1, I would say. Our kids must know about money, how to create money from grade 1. I'll tell you something else that I remember earlier on in early 90s, attending a meeting. And I think we were only two blacks there. And the meeting was on Zimplats. And these guys were discussing this, and I lost my concentration on that because I attended one meeting, I didn't come back to the other meetings. But the result of this was guys who attended those meetings bought shares of Zimplats at 25 cents, Australian cents. Now you can imagine somebody bought 1 million shares, they paid 250,000 Australian dollars. This share, Batanai, went up to $17. So which means the guy who bought 1 million shares for 250,000 ended up with 17 million Australian dollars. And I kicked myself because I was not switched on that time to understand what was going on. We need our youngsters to understand what's going on, to understand what's happening with resources, how to invest, how to manage money, how to create more wealth. Because when we grew up, we didn't have this knowledge. We were basically financially illiterate. We have to stop that.
Thanks for that insight, Doc. Probably I'll just ask who's the head of investor education to just come in and share some of the efforts that they are doing in terms of investor education and also covering the investor one-on-one. Farah.
Hello, Batanai, can you hear me?
Yes.
Can you see me?
You can hear you. Yes, you can see.
Okay, and Solomon, can you see me?
I can see you, and you know I love your hairstyle all the time. You look like a goddess.
Solomon, we are here to talk about investments, but I do hear that Batanai spoke to you about your various interests, and I'm very aware that this whole discussion on natural assets is very, very close to your heart. So I think Batanai must have known intuitively to have a guest who is put together in the manner that I am. But Solomon, thank you very much. Batanai, thank you for having us. And the students who are listening, what an honor to have you, because you are the future. And these are the discussions we need to have with you with some level of urgency, which I think Solomon did an excellent job of conveying in the very broad, very knowledgeable, very experienced discussion that he took us through. Solomon, your final comment I will begin with, because it is one way already we are initiating discussions through the Financial Inclusion Committee, which is comprised of ourselves, SEC, IPEC, the Insurance and Pensions Regulator, and we are led by RBZ, who are secretariat to that larger committee, which reports into the region and reports globally. I'm happy to say that the ministry which we report to, Ministry of Finance, is facilitating our discussion and our overtures to Ministry of Primary and Secondary Education, who are at any time now conducting a review of the curriculum. And they have expressed an interest in inviting us as the three regulators to assist them with the review, which will ensure that we extend the area of wealth creation, as you described it, and insisting upon a mindset change. I'm borrowing everything you've said, Solomon, a mindset change from the earliest age possible, so that when they advance into high school, advance into tertiary education, become business persons, employers, in other words, or become persons who are absorbed into industry and productive activity, they have the correct mindset with the actual tools. Because again, Solomon, your very able guest, took us through a number of terminologies, and he said, to quote you, Solomon, knowledge is knowledge, which means you acquire it and it's yours to be used, and that drawer can be opened at any stage in your life. And what we've done in the handbook called Investment 101, which is funded by IPF, who are the Investor Protection Fund. Their role is, as has already been described, to protect the investor by way of compensation, but more importantly, by way of proactive education. The more you know, and now we know the earlier you know it, and the more au fait, the more comfortable you are talking investments, selecting them, discussing them, interacting at local, regional, global level, the more astute you will become and the more aware you will become of Zimbabwe's tremendous wealth. I'm like a ventriloquist, Solomon. You've laid the way. The tremendous wealth that exists here, because it is from that natural endowment that income generating activities become small businesses, become SMEs, and become ambitious enough to raise money. And one of the best ways to raise money, as Solomon has said, is as a small company, you go to a stock exchange, which we as SEC regulate and supervise and provide surveillance over. So they are safe entities, regulated entities. And there you'll be able to raise money by way of carving up your company into small bits, and the Solomons of this world and you, the students, buy small pieces and own that company. And you not only that, have a voice at annual general meetings to say, no, we do not agree with the way you're running this company, because now you've learned how to read a balance sheet. Now you've learned what corporate governance means. Now you understand what type of characters you want to be running these entities, characters who know the difference between assets and liabilities. What is going to add value, what is going to drain the organization. So, this book is the one which provides you with the nuts and bolts of how to go about investing, how to equip yourself. And we've got a conversation happening this evening at 6 o'clock. Please join us then if you are able to, where some of the things that Solomon and Batanai have presented at a fairly high level, we're going to deconstruct some of those things, simplify them for a younger age group, and have a separate conversation for an hour with young people, some of them with their parents, so that we can delve deeper into some of these issues. So I'm so excited to be here. That is the message. It's a mindset shift, and we're going to have, I think, lots of fun, but I would never underestimate the risks attendant in investment. Solomon probably can absorb some of the shocks of investing on the stock exchange. Many of us are perhaps more vulnerable, and the younger still will be even more vulnerable. But Solomon says, don't stop, keep going, and start now. There's so many nuggets that you've provided us, and in the process, you've literally put words into my mouth, for which I'm most grateful. So congratulations, Solomon. Continue to be an advocate. We as regulators are very much attuned to the role we need to play, and maybe the greater role we need to play. And we as SEC and IPF are stepping up the education side so that we can ensure that mindsets do shift from consumption to investment and long-term investment, as Solomon has said. Batanai, thank you.
Thanks, Ferry. That was beautiful.
I wonder if we've lost Batanai.
I wonder, we can't find him now.
Very interesting. So what was if you don't mind my asking, while Batanai rejoins us, have you made an investment recently? I cannot talk about specific counters as a regulator. I can't speak about our licensees, but I just wonder whether you've made a recent investment on any of the stock exchanges.
Well, if I have to be honest with you, and that's something I know that this is an appropriate forum to discuss this, but I know that the Reserve Bank is not very keen on cryptocurrencies and blockchain technology. Now, I happen to think that the whole world now is moving towards cryptocurrencies and blockchain technology. And I hope, since you speak to the Reserve Bank and the regulators, you really emphasize to them that if we don't get involved now, we'll be left behind. And that's my feelings, my personal feeling. That I would like to think that time will bear me out. So on a personal level, and I'm being very honest with you, I have shifted for the time being towards cryptocurrencies and blockchain technology. And I have to tell you, and young people must listen to these words, it's a fact. I got involved with Bitcoin last year from June. That's when I got involved. And it was like 6,000. And it's gone now. That was June last year. Now it's not even June. So it's less than 1 year. It's gone up at something. So we need to open up and be part of the world. We can't isolate ourselves. We can't afford to do that. And so if you think of the cryptocurrencies, you look at DeFi, the decentralized finance, you look at the dApps, the decentralized applications, and now they've got these NFTs, the non-fungible tokens. We could have young guys in this country who are very savvy, who can come up with applications which could make them multimillionaires, billionaires overnight, just because they got this knowledge. We cannot cut ourselves out. We cannot cut our youngsters out from this. This is the way the world is going, and we have to get involved. So right now, I'm reading a lot about this stuff, cryptocurrencies, about all these things, DeFi, dApps, and all this. That's what I'm reading right now, and that's where I'm investing my money.
Very interesting. Solomon, thanks. I see that our hosts are back. I don't have a name, but can I just confirm that you're back, Morgan and Co? Can I hand back over to you after a very stimulating soundbite from Solomon there? Are you there?
Wow, just the 12